Hi, this is Kyle Ferguson with OptionSherpa.com. And for the March newsletter, I want to run through one of the stocks that we just sold on March 28th, CREE, C-R-E-E. And I want to kind of show you how that investment looked over the last few months, why I got rid of it, and just kind of give you a breakdown of what the March options looked like. So here's CREE. This is a stock chart of the dailies going back to July of last year, and you can kind of see that there's some big gaps down in here. Most likely these are earnings announcements when these gaps happen. CREE is a growth stock. It doesn't necessarily have a good dividend, but it is a growth stock, and some of these growth stocks like CREE come with extremely good dividends, or extremely good option premiums. And when these stocks have good option premiums, we can make up for the lack of dividend that they have. So this was one of the reasons that we had it in one of the option share portfolios. And it's been rolling around. We've kind of been looking for a breakout. You can kind of see this only line that I left on this chart is the 200-day. And you can see that it just kind of dives back below and above the 200-day, and it just kind of keeps rolling. The 200-day acted as some serious resistance right here. So, it's just kind of been rolling sideways since we bought it. We bought it around in here. So we actually the stock's gone down, a good 10% or so since we bought it. But I want to show you why that doesn't worry me too much. And so you guys can kind of start thinking about stocks like CREE and other stocks in your portfolio. So we bought it in here on the 9th of January. So right here, almost at the top right here, the recent top, I guess. And it's rolled a little bit sideways ever since. Now, I'm going to take March as an example, so you can kind of see how this option selling works on a weekly basis. Week 1, we sold $1.11 of premium. By the time we bought it back at the end of week 1, we had gained $1.09. So the stock went down from, that was about in this period right here. The stock went down a little bit, but we gained $1.09, which is 2% roughly on the stock that week. Week 2, we sold 29-cent premium, and we lost 60 cents. So that was a negative week, which most likely was during this little kind of spike up in here when it went from here to here. We lost on the option we made on the stock, but we lost on the option. Week 3, we sold $1.20 worth of option premium on the calls, and we realized $1.19 by the time we closed it out on Friday on the close. Week 4, we sold 91 cents worth of premium, and when we sold the stock, we just kind of, when I sell the stock, I just let them expire worthless, and we took in 90 cents right there. So just for the month of March, we realized $2.58 worth of premium, which, is roughly, over, it's right here. It's 5.22%. So even though the stock kind of went sideways, didn't do much, lost a little bit, actually lost 4.77% in March. If we had just owned that stock and not sold our call options like we do, we would have lost 4.77% on CREE this month. But instead, because we sell the call option every single week and take in these kind of premiums, we were able to not only offset that loss, but we were able to make almost 0.5% on CREE for March. So that's just kind of an example of how the system works. Now, I like to have a good dividend as well in some of these because we also would be earning dividends as we hold them. But since we bought CREE, like I said, it's a CREE, it did not do very well since we bought it. And we didn't necessarily want to buy it here, but we wanted to put on the portfolios in Sherpa, and we know that the timing isn't necessarily that important because of the strategy. You can see that since we bought it, the stock's gone down. It hasn't been great. The market's chopped around ever since the beginning of the year, but we've reduced our cost basis in the stock since January by almost 20%. I think it was like 9% in January that we took in, and then we took in another like 4% in February, and then almost over 5% this month. So almost 20% in option premium we've taken in on CREE since we purchased it. So it's still got some good growth potential. It's still a good stock, but it's just not quite right for the dividends that we're looking for right now. But you can kind of see how powerful the strategy is on a weekly basis if you are disciplined to sell these call options every week and take in the premium. We took in over 5% of premium just in March. So that's an example of why we're doing the strategy. Imagine if we hold a stock like CREE over the course of a year. We might reduce that cost basis almost 50% if the market stays sideways or goes down a little bit like it has. And that means we have paid for 50% of CREE in the first year of owning it. So these stocks, after 2, 3 years, you can almost have paid for the entire purchase of the stock by selling these call options. And then after those years, then everything you make is, free money. So that's an example. Please go to optionsherpa.com and let me know if you have any questions. Thank you.